In this video, I will tell you some great investment strategies which, if followed, can make retirement your life prosperous. So let's start. We earn throughout our whole life to have a happy life after retirement. The more quickly we plan our retirement, the better it becomes for us to get a happy and wealthy life after retirement. That's why in this video we are going to talk about how you can plan and invest for your retirement. 1. Invest for retirement in dividend-paying stocks. In the stock market, you can find different kinds of stock. Some of the stocks make a great advancement in their price, but there are many stocks which it takes care of its investor by giving them assured dividends in every quarter, and those are called dividend-paying stocks. Now here comes the question why you should invest in those stocks and what is the connection of those stocks with your retirement. Well, as mentioned, almost every dividend-paying stocks pays a dividend to their shareholders in almost every quarter. That's why investing in those stocks makes a great opportunity for the investors to generate a regular source of income, which is the reason why you should invest in dividend-paying stocks. But we do not recommend you to invest in stocks only for receiving the dividends without properly knowing about the company. 2. Invest for retirement in tax-advantaged accounts. The government earns a great amount of money as the form of taxes from the investors regardless of their diversified investment strategies. Investing in fields like equity, or debt, or real estate, or gold require you to pay 3 to 15% for short-term capital gain. The returns are taxed at 15%, and for long-term the percentage becomes 10 on your capital gains. But thankfully there are some fields which let you invest without paying taxes. There are plenty of options through which we can invest in tax-free fields. The first one is PPF, which almost everyone runs. Tax-saving mutual funds are a great option for those who want to invest in mutual funds but don't want to pay taxes. For your information, most of the tax-saving mutual funds have a lock-in period of 3 years, not allowing you to withdraw the invested capital within 3 years. But once the lock-in period ends, the capital gains becomes tax-free. An investor like you, who is planning to invest for your retirement, would definitely not like to withdraw the money before retirement. Another two most popular tax-advantaged accounts are 401k and individual retirement accounts, IRAs. They have their own limit of investing, but a consistent habit of investing in it will make your way ahead. 3. Invest in annuities. Annuities are one of the best products for a regular source of income after retirement. Annuities are made in that way so it can pay a fixed amount of money for a longer period of time. In simple words, annuity is a contract between you and a financial body like banks. In annuities, you pay insurance companies for a major period of your working life, just like premiums of insurance. Later, when you retire, the company starts to pay you the invested money. The company continues to pay you distributions either to a specific period of time or a specific period of time until you or your partner dies. In the meantime, the insurance company invests the money it collects in different companies, and thus your money grows. Things like payment interval, age of starting the annuity are predefined. Different kinds of annuity like fixed, variable, index are present to invest. Beware that some annuities have hidden charges too. 4. Invest in debt funds. Debt mutual funds are one of the safest ways to invest directly in the stock market. In debt mutual fund, the lender and the banks are the borrowers. As the banks have taken money from you as loan, they are required to pay you some interest, though the percentage of interest and the returns of the debt fund usually remains less than any other equity funds. Still, debt mutual funds are considered to be a safe way to invest because those companies are liable to pay you the interest, but in equity, if the company runs and loses, you may also lose your wealth. Debt funds usually generate less return than equity, but over the period of time if you invest in debt, you can take the advantage of compounding, which will comparatively give you a better return than investing in fixed deposits. Once you retire, you can withdraw the invested money from the mutual fund with the help of SWP, Systematic Withdrawal Plan. 4. Buy rental property to invest for retirement. Real estates are one of the most popular investment options other than the stock market. Over the years, people from the United States and other European countries are continuing to invest in real estates, and in the recent years it is becoming popular among the people of Asia, especially in India. The main advantage of investing in real estate is that real estate does not include any market risks. To invest in real estate, you are required to invest a lump sum amount. While real estate can give you a lump sum amount of return at a certain period of time, buying rental property will give you a consistent return over a longer period of time. Rates are a good option if you want to buy real estate properties with the minimum headache. 5. Understand asset allocation to invest for retirement. As you are planning to invest for your retirement, you should know how and how much you should put your wealth in different kinds of investment options. As the great saying of Warren Buffett goes, don't put all your eggs in one basket. So we should diversify our investment to get assured returns even after retirement. Some of the most popular investment methods, as we all know, are stock market, bonds, gold, and real estate. Diversification has a lot of benefits. It not only protects most of your wealth, but also allows your wealth to grow at a consistent rate. If you want to take risk, you can invest a lion's share of your wealth in the stock market. Better to say in equity. If you don't want to take risks, you can invest in gold for digital gold. Bonds and agreements are a great option, but it produces less returns. Real estate is also a popular option, but to buy real estate, you will need to invest a good amount of money. 6. Start SIP. Systematic investment plan, also known as it, is a great tool for long-term investors to get consistent returns after retirement. The main purpose of society is to grow your wealth, not to earn money from it. In an SIP, you can get the benefit of compounding. The longer you keep your investments in SIP, the more advantage of compounding you can get. SIP have a lot of diversification, so you can invest in your favorite field. Investing and withdrawing capital from SIP are comparatively easier than real estate. So irrespective of how much investment you have in other places, you must start a SIP. In addition to those efforts, it is also recommended to listen to trusted advisors if you do not have any prior investment knowledge. There are many advisory bodies that manage your wealth. You can also put your money in them if you trust those. That's all in this video. Hope you like these investment strategies. The best investment and trading options are given in the description below, so don't forget to check them. If you like the video, then like and share it and give your opinion through a comment. If you haven't subscribed to this channel yet, then do it now and press the bell icon to get notifications of my future videos. Thanks for watching.